Okay, let's look at our little oil trade in here from the other day when I was goading everybody on and saying, okay, look at we got the one, two, three up, and we're going one down, two down, and we're going to come on down in here. This is our target down here. Because look at it, it's just falling down there. That's a logical target. Well, that's what the market makers are trying to do to you. They're goading you on, saying, yeah, look at that, it's going down, it's going down, it's going down. It's lower lows, lower highs, lower lows. It's going down, but it didn't. So let's explain what was going on. We're all correct, and this is one right there. Okay, so we'll put a one right there. This isn't a three though. This is a push two. I'll show you why. We'll get there. So for push two, where's one? No, it's not there. It's down here. All right. And the reason is because when you add in all these other things, you can see you got a one, two, three. When you're counting, you can have sub counts in there. But you're looking at this thing here and saying, how can you call that a push two? The price is just going up. There's nothing unusual about that. No big pullback or whatever. Well, not normally. However, look at this. See how you got a low here, a high, then a higher low? That's in the price. Now look down here at your RSI. Okay, so you got a high, but then you have a lower. You're a good lower high, but you go to higher low. So it's the opposite. Most people know of diversions like over here. You get the high in the RSI, you get a price there, then the price goes higher, but the RSI doesn't go as high. They call that a diversion. This is just the opposite of it. Okay, and why do I call this a push two? Because you get these reverse diversions on a pullback of a push two. That's just the way it happens to work out in the count. I just noticed that a long time ago, so it's what I've called it, and that's what it is. And you can see it really clearly when you're lining these things up. But something else to see in here is that, see this one right in here? You're getting a baseline bounce off the baseline on the pullback of push two. You get baseline bounces off the pullback of either a push one or a push two. Sometimes both, but it's usually one or the other. Which push two we don't know, but it's usually a pullback off of push two. Nice and crisp bounce off of the baseline. So that's how we get to a two there. Oops, looks like I should have put a red 3 up in here. Sorry, I missed that one. Okay, so then on our 2 here, look at, we get the same thing. We get the reverse divergence in here. We have a high and low, then down here. It's our one pullback. Our RSI is here. It's lower over here, but the price is higher. That's another reverse divergence, giving us another indication that's the end of a push to a pullback. Plus, if we look in here, this is what I see also. 1, 2, 3 pushes down here, and that's a 1 minute bounce. 1 minute bounce off the 50-minute EMA. Oh, 1 minute RD, you can see that right there, and a 3 push. It's usually pretty strong. Now you see how this price goes up in here? That helps me clarify what type of push this push 2 is. I call it a full move because essentially you see the price usually comes back and stop on push one some way or another. This is push one way the heck down here. Didn't happen. Okay, so when it goes down like this, you see this nice sharp move down and a sharp move up. That's what I just call a full move. That's one of the movements. So you got to. That's just the way it is. All right. And we're coming over here. Over here, what do we have? I got one down and two down. So how can I call it just two? Two should be maybe down here, shouldn't it? Shouldn't this be one and just be two down here? Not really, because look what we have here. Oh, that reverse divergence again. Okay, we got a high, a lower high. We got a high in the TD RSI and a higher high in the RSI. Another reverse divergence. What else do we have? Oh, look at. See, we got a baseline bounce off the pullback of push one. I mentioned that over here. It's either off a push two pullback or a push one pullback, or it's off push one. And we have a reverse divergence in there. Now, then this type of pattern, you see how it's nice and tight in here? It didn't take out the pullback of push two. I call this a pattern here, a condensed movement. It's like a spring. You're coiling it up, boing, boing, then it springs down, nice and fast going down, and just as fast coming up. That's how I've defined a condensed movement. And so, coming down, we've got a 1 up there. Coming down here, you got 1, 2. So what do I call this a 2? Again, it's our little buddy, the reverse divergence right in here. Look at this. What do you see there? you see a baseline bounce right there off a push 2 pullback with reverse divergence. Oh, so that's how it works. So they're coming down a little bit lower. We've got the one there, 2 down here, and what do we call this? The end of 2, because we have another reverse divergence. Remember, reverse divergence indicates a pullback of a push 2. Which push 2 we don't know, but in logic, this makes sense right in here to me for the major push 2 back of this one. So what type of this movement is this then? That is what I call an all aboard. Oh, look at threw them all on at once. Sorry about that. But this is an all aboard because you got 1, 2, 3 down, nice and fast, nice and tight. Okay, and this I usually mark the push twos to tell me how the whole movement should play out. This I have up here as a whipsaw because you know what? Price came down and took out the pullback of push 1. So I'm expecting price to come up above here to give me a push 3. That's what we're looking for. So why did I choose right here? Well, look at the RSI. See where it is? See the bands? The bands are below the 50 line. Everything's below the 50 line. The bands, the RSI, and everything else like that. It's way down. It's way down here. Well, up in here it was up there, but it didn't. Price didn't really go a long ways. And for me to consider it going down there, it's sort of it has to get wound up. It's like in here. You see, it's got it did the band whip up in here. You need to see the RSI come outside the bands or at least come up to it nice and strong, then you go down. But when it's kind of muted in here, you don't expect a strong move down. So the next logical point for a push 2 pullback is to take this thing out. It doesn't have to go far, and it didn't. Okay? If it came way down here, well then I'd be very surprised. I'd be out 5 pips too. But it didn't. It came down there, and that's what we got. It popped right up in here. Now then, I'm expecting it to go up here. So why do I put my target right here for price? That's 50 pips. You know, I risk 5, you make 50. That's a 10 to 1 reward to risk. I mean, what's wrong with that? If you put a half a percent of your account on there, you've increased your account by 5%. And you count these things like 10, 12 minutes. 10 to 12 minutes, you increase your account by 5%. What's wrong with that? If you put your money in the bank, how long is it going to take you to get 5%? It's going to take more than a year. And if you do 50 points, well then, you got it in 10 minutes. So why don't I go up here? First, I want the 50 points. I want to increase my account, put some money in the bank. And second, I can be wrong. And here I was wrong. It didn't go up all the way up there. It came up in here someplace. Came up in here, then eventually came back down a little bit below here. It didn't take out the low. It just came down below here. It didn't go above this until the next day. So I saved a lot of aggravation and heartache and wondering, oh, geez, I should have done that, I should have done that. You just take the money and run. That's the basics of it. So you say, how do I see all of this stuff in here? Huh? Well, I do what's called homework. Every trade I take, I mark up and I save them. Like like this here. You see, well, here. I've got in the pictures. Every time I take a trade, I mark it up on there, and I just take a snapshot. It goes to my pictures folder. I got 580 pictures in here. So yeah, there's a lot of trades in here. So what you do is you can just see I just come in here. I mark them up. Why do I mark them up? Because I'm keeping my eye honed. I'm keeping it very tuned as far as what's going on in the market, so I can see the things. You ever talk to or hear about these great athletes out there that play well in basketball, baseball, football, whatever game you want to play, lacrosse? The best ones are always out there doing practice. They're practicing, practicing, practicing. Okay, so that's pretty much what I do. I'm not saying I'm a great athlete or anything. It's just that I spend a lot of time doing homework, and then doing it, marking up the charts is one thing as far as the trades, but I keep it on a historical basis. I create a little um, database, and I come in here and I save things. And let me see, it was on the 15th. Here it is, the 15th. And see, I go in there and I save the flashcards for each day. This is the 60-minute chart. It shows me the price action in 60 minutes. I mark that up. This is the 30-minute chart, the 15.5, the 1-minute chart. I do most of my markups on the 1 minute. So on the 1 minute, you come in here, you can see the count that I had in here. Okay, I changed the count from what I showed you because the price went lower. But I can see that it's my count is off here. I should have kept back. That should be still one. That should still be two. And then be a one here, a two down here. I pull back the two, doing the stop hunt. That would be a classic movement, and then to come on down. So I'll change these things eventually, but it is what it is for the moment. Okay, so so there, I took a little pause and I fixed the numbering here. We got a one down, a two down. There's a one. We got a two. It's a classic because it came back and stopped on and push one. So it's marked up. So this came down to a three. So you see, if I'd stayed in here, it didn't take my 50 pips, I would have been stopped out for a loss or a break even. It would have been break even. But still, why give up 50 when you can take it? So that's what I did. And let me see here. This is one of the ways I do my homework. I've been building this thing. This is a database. I've been writing it in C Sharp. It's taken me a number of months to write this because I'm a hack at it. I really don't know how to do it, but I figured I'd like to try it and do it, and it's working out pretty good so far. So I guess my intention is I'll make this available to people eventually. I got to finish it off because right now it still crashes a little bit. I have a few more features I want to put in there. But once I've got that figured out, I have to put it on a website so everyone can use it at the same time. Well, that's something for way down in the future. But right now, in the meantime, this is what we have, and this is what happened. It's great.